Hello everyone, this is Martin. Welcome back to another weekly video, and we're going to look at how to trade the Forex markets using my new Easy Read charts, and they're proving to be quite a hit with a lot of students who are taking my brand new course called Forex Success in 5 Weeks. If you want more information on my new course or anything else I'm doing or anything about the video, you can contact me. Here we go. Martin, MSKYJ007 at gmail.com. Okay, we're going to be looking at trading opportunities for the week, that's this coming week, March the 26th to the 31st. So before we start with the charts, we want you to look at this risk disclaimer right over here. Read this at your own time, or you can pause the video, take a look. It's really super important. Okay, this week I'm not going to have time to review all the charts as I normally do. I don't have a lot of time this weekend to produce this video, so we're just going to cover the major pairs. And we're going to start off with the EURUSD. You can see that right here. Now, the first thing is, last week the U.S. Raised their interest rates. That happened on Wednesday. They raised their interest rates by 0.25%, and it was really a lot to do about nothing, really, because instead of the U.S. increasing its strength against the currencies trading against them, the U.S. actually lost a lot of value last week after Wednesday's interest rate hike, and you'll see that in the coming charts. The euro, the British pound, and the U.S. Or the Swiss franc and the Japanese yen all gained against the U.S. dollar. So part of it, I believe, had to do with a lot of the controversial possible trade wars with with the United States against China, slapping on extra tariffs and things like that. So there's some political instability as far as what should be happening, and I believe the U.S. is paying a little bit for that. But again, that's short term. That may only last for a few more days or into this coming week, and then we'll see what happens if the U.S. rebounds in strength again. So starting off, the EURUSD is the daily chart, and you can see price really has hit support here. Here's okay, price went up, came back down. There's support. Price went up, came back down, testing support again, bounced higher, and my bias is to the upside. I think price is going to break higher above the trend line here, and the major support is holding pretty well. However, price may also from here bounce right back down and retest again. So this may go on for quite some time. Really, the market is sideways right now. Take a look at the MACD below. And if you believe price is going to go higher, then I would look at buys above 123.91. On the downside, price would have to break this major support area, okay, and you would have to take a look at a sell below 121.44. Also note right here, we have the 89 EMA as support as well. So that's the EURUSD. We're looking at the Easy Read charts. That's part of the new course. And right now we've come into on the charts. It does show it's a momentum squeeze area. Now this candle right here with the blue dot and the red arrow, and let me just take that off there. This is a Mo squeeze area. I teach that in the course. This is kind of a breakout candle right here, and that's why I'm kind of thinking that price may just break through the trend line and go higher. Okay, but that's a signal candle that I teach in the course. Now let's move on to the next pair, the British pound USD. You can see last week it was one of the strongest currencies, the British pound against the US dollar. And take a look here. We've had This is quite an uptrend. Had a bit of a pullback, a good momentum candle, and our training course, the training course I'm trying to teach you, is all about momentum. So with this candle right here, this is a momentum candle to the upside. Here's an inside bar, and I would have traded right there, right above there, and you would have been in a trade, and you would have made some pips. So that is that's a really, really terrific idea as far as taking a trade entry. For this week, I'm looking at buys above 142.24. I see the trend continuing higher to at least take a look at the left here to at least test the previous resistance high. And I've drawn in this rectangle. This rectangle represents the resistance. Okay, so I do expect price to go higher to test this area, and then from here could either break through or come back down and bounce down, and then perhaps break higher again. Okay, you can see down here the blue MACD has now crossed the 0 level. We've got some green bars here on the trending indicator, the short-term momentum indicator, green here. Everything's pointing for price to continue going higher. So trend continuation. Okay, now let's take that off and let's jump to our next chart. Australian USD. Now this currency pair has really been jumping around sideways. You can see price came down in a big way on and this was the close of the previous week. Okay, these candles represent the 5 trading days for this past week. So you can see price, after coming down quite a ways, price just went sideways and then went right back up, but did not really break above the 8 here. This is our short-term speed line, so did not break above, came right back down. Then we have a bearish looking doji. So I'm kind of thinking price would still may still come down a little bit lower, and you can see we're in a kind of a channel, a bearish channel, with the upper trend line, the lower trend line. So if you think price is going to come lower, look at sells below 0.7668. Price, however, would have to come all the way above here, close above. Here's the 89. Here's the 200. You can see the moving averages right here. But price would have to come above here, above 0.7824, for you to even consider a trade to the buy side. Okay, so that's the Australian USD. Now we move to gold, and I talk about gold because often how gold goes, so does the Australian dollar. You can see last week after hitting bottom here, and again, take a look. When I say bottom, take a look at your left. Always take a look at your left for the swing lows. There's one right there. Price went up, came back down, so there's another swing low. So when price comes up and comes back down and bounces higher, this is called the support zone. And support, by the way, is not one line, not one level. It's an area, okay? It's a wide area. So here's support. Price came back down again. You can see that right here. Bounced higher on Wednesday. This is the last Wednesday's candle. This was a really big momentum candle to the upside. Based on that, you could have gotten in right there, right above there, after this inside bar. Okay, and this also, take a look. I've got this candle with a dot and an arrow. Okay, and that's that does represent a signal that I teach in the course. So entering, you would have gotten some pretty good pips out of this one as well. And I do see price continuing to go higher on gold to at least test this resistance area. Again, you can see the resistance was tested here, and this was the start of the resistance. So I think price is going to go up, and then once it comes up here, it may come back down and bounce and go sideways. So gold certainly strengthened last week, and that did give some strength to the Australian dollar as well. So now we move on to the next pair, New Zealand USD. And again, I see. I had drawn in this support zone the previous week, just to show you again that we have a major area of support. Okay, right here, support, where price came back down, bounced higher, okay, and it seems to be going sideways right now, but we are underneath. Price is not closed up above the 8. This is the 8 EMA. We have pink below blue. That means we're looking for sell trades. When you have pink below blue, we're looking for sell. However, we have a major support area, the confluence of support, because not only have I drawn in this gray rectangle, but you can see this red dash line. You see that right there? That's the 200. You see this 89 EMA, this dash blue line, that is the 89. So with these two major moving averages, with the support zone I've drawn in here, it certainly looks like this is a major area where price is perhaps going to be bouncing sideways, but it may eventually break through to the downside. And it may, and if that's the case, and if you think that's the case, then look at sells below 0.7146. Okay, so right now you can see, take a look down below, the blue MACD line has crossed below the 0 level, and you know, it looks like price either is going to keep going sideways, may break through, may even bounce higher, but again, you're going to have to wait for more evidence on this pair. If you think price is going to go much higher, then you'd have to wait for price to come above 0.7336 for a possible trade to the upside. Okay, now we take that off, and we're going to jump to the USCAD and take a look at this. Okay, let's just look at structure for a second. Price really bounced off. This was a uptrend pullback with momentum, big momentum candles. These large candles are momentum candles showing that the trend is continuing to the upside. Okay, and you can see the green area is getting wider. And you can see the step pattern here. So we have big momentum to the upside. Another clue to momentum is that when price stays above the 8 EMA, that means the momentum is really strong. Now we have a pullback, and I teach in a pullback. There's the pullback. We look for a clue for a trend continuation. We had that with this candle right there. Okay, you could have gotten in. Stop loss would have been here or here, and you would have made some really amazing pips to the upside. Now that was the previous week. Last week, price made, let me just take that off for a second. We had a topping here. Okay, see this kind of rounding pattern. So a bullish candle at doji that made a new high, but then it was rejected by the sellers. Another doji. This is the inside bar right there. Could have taken a sell trade for a super aggressive sell trade. However, this candle also is a bit of a clue right there. What I want you to see is something else. I'm going to point out, let me take it off. See these two long wicks to the downside? That means sellers had brought price back down to this support zone. See, this is support. I've drawn that in with the gray rectangle. So sellers brought it all the way down. Buyers brought price up. Sellers brought it down again, and again rejected by the buyers. Buyers bringing it right back up. So there's a tug of war going on right there. That seems to be an area where price is settled or starting from. Okay, and you can take a look down below. Take a look at the MACD. Blue MACD has crossed the red signal line. So the short-term momentum is increasing to the downside. However, take a look right here, the trending indicator, the bars, whether you see green or pink, it doesn't really matter. This indicates, as long as it's above 0, it indicates that the trending, we're still in an uptrend. For the trend to kind of change direction, the bars would have to be below the zero level. Okay, so right now we're still in an uptrend and we're waiting. Price may come back down and then bounce back higher, or may break through. So if you think price is going to break lower, look for sells below 127.87, and on the upside, price would have to come above 129.55 for you to consider taking a buy trade to the upside. Now, oil, we talk about oil because oil and the Canadian dollar go hand in hand. We had a nice uptrend on last week for oil, and this last candle, this is Friday's trading right here. That's a pretty good momentum bullish candle. So price here, we're at testing previous, take a look here, we're testing previous resistance. So from here, price may either go up a bit, maybe there might be a bit of a false breakout and then price come down, or price may go up through. And so you basically have to wait for more evidence. We're right at support right. I'm sorry, we're right at resistance right now. Okay, so it's a wait and see situation. But oil did strengthen last week, which helped the Canadian dollar. Again, I'll just go back to that. So when oil got strong, the Canadian dollar got strong along with oil, and that's why the US CAD pair dropped in price, because remember, currencies trade against each other. So if the Canadian dollar strengthened, the US dollar weakened, and that's why we had a drop in price last week. Again, but it's these two wicks that you have to keep an eye on. They both Thursday and Friday trading, the buyers brought it right back up after the sellers tried to bring it down. So there's a bit of a tug of war going on. Okay, so let's take a look at the next pair, and we're going to move to US Swiss franc. I've drawn a lower trend line. You can see that price has been going up, down, up, down, up, down, up. Actually, this is a pretty good uptrending pattern where price is making, take a look, price is making higher highs. Here's another higher high, another higher high, another higher high. Along with higher highs, they're making higher lows, higher lows. Okay, so this is, when it comes to structure, when price is making higher highs and higher lows, it means the uptrend is intact, and that's a pretty good structural formation for an uptrend. Okay, and again, for price to start making a downtrend, price would have to get below this area. So I'm looking at, if you think price is going to come down lower, look at sells below 0.9442. Now note that price had been up and had been above the trend line, but price did break below the trend line, okay, on Friday. See this Friday's candle? Okay, so it's kind of a bearish pin bar, but again, we have green above blue. So when we have green above blue, we basically are waiting and looking for a trend continuation to the upside, okay? And if that's the case, then you could look at buys above 0.9574. Okay, so again, price here, because price had broken below the trend line, you could still, again, we are waiting for price to see if it continues higher, but we're also going to get ready for price to drop lower, below 0.9442. Okay, so let's take that off, and now we move to our last pair. I'm going to be talking about this last pair. I won't have time to go over some of the cross pairs. I just don't have time this weekend, but this is the last pair, everyone. This is the US Japanese daily. All the charts are daily charts. This is what happened here last week. You can see the vertical line on all the charts depicts the price action for last week, the 5 candles, trading days, the Sunday, Monday, Tuesday, Wednesday, Thursday, and Friday. And you can see we really had a bearish price move last week for the US Japanese yen. Again, even though the U.S. Increased their interest rate by 0.25%, thinking that the U.S. would strengthen, but against the Japanese yen, it did fall instead, went the other way. And I believe price is going to continue going lower. And if you think the same way, then look at sells below 104.60. I don't have anything to the upside, although if you think price is going to go higher, then you'd have to wait for price. See this area right here? You'd have to wait for price to come above this level for a possible reversal to the upside. However, my bias is to the downside. Take a look at the short-term momentum. The blue MACD line below 0. We have some pink bars. Okay, we have one pink bar forming now on the trending, longer-term trending indicators. So we have pink. We have pink. We have pink below blue, which means we're looking for sell trades. However, you could look at, and let me take this is the last trade idea here. You could look at price perhaps coming back up and bouncing off the resistance and then coming back down. So you could look at that scenario as well, or a break, like I said, below 104.60 right away. Okay, so that is it for the last currency pair. And finally, if you liked the video, don't forget to subscribe to my YouTube channel. Click on the like button. I'd really appreciate that, because I am trying to spread this message around the world. I do thank you very much for watching, and especially if you're a new subscriber. I'm getting a lot of new subscribers lately, so thank you to all the new subscribers and all my new students. Take care. We will talk to you again soon, and we'll look at another video for next week. Bye for now.